What's up, guys? Kyle here with No Tie Required. All right, we're back with some more crypto talk. We're going to do a little bit different format today. Today, we are talking some crypto 101 investing strategy. Let's get it. All right, yes, guys. So we are talking an investment strategy that I absolutely love. I think it's essential for anybody in crypto, especially if you're brand new, which, we try to cater as much as we can to all audiences on this channel, but especially anybody that's new coming into the space, because look, we've all been there and we need to have solid strategies that will help over time. All right. So before we jump into this, smash that like button if you love cryptocurrency or just investing in general. It could be stocks, it could be anything. This strategy is a solid strategy all the way through for that. So if you like investing, if you like crypto, smash that like button. Also, subscribe to the channel if you haven't already. Turn on that notification bell so that you get notified every time we drop a video, which is almost daily at this point. So with that being said, let's talk about it. I want to talk about something called dollar cost averaging. Okay. Dollar cost averaging at its most basic form is basically we're not buying everything all at once. Okay. And we could get into the super technical, definitions of it and stuff like that, but that's not what you guys are here for. You guys want the basic information on what it actually is. We want to try to make it as simple as possible so that it works for everybody. Okay. So we're not buying all in on something right away. Okay. So, let's take Bitcoin for example, and we're going to jump into the screen here in just a minute. We're going to talk about that, but let's take Bitcoin. Okay. We don't want to just buy all of our Bitcoin at $50,000. Okay. We want to buy it all the way up, but you don't want to buy it at the height. Okay. So you want to buy it on the dip, but you want to buy it all the way up as it's going up. Okay. You're averaging out those dollars that you're spending. Okay. So even if you are still buying some when it's at $50,000, you've already bought some at 10,000, you've bought some at 20,000 and so on. Okay. So you always want to make sure that you have money set on the sideline, ready to go. Okay. We don't want to put all of it into the market because you want to catch those dips. Okay. In the crypto space, especially, I mean, it happens in stocks and stuff like that too. Stocks are going to dip down and that's when you want to buy. But in the crypto space, it's so volatile. That's when that can absolutely happen on any given day. You could have a 15-20% swing on something. You want to have some fiat money sitting on the sideline ready to go so that you can catch that dip and then ride it right back up and make that profit, make that extra 15-20% profit on top of how much higher it's going to go on it. Okay, so make sure that you are working to dollar cost average and you don't throw all of your money into it right away, because you want to be able to catch those dips. Now, an important thing that you always want to remember, we want to buy on the dip. Okay. And I keep on saying that, but I want to keep reinforcing that because that's when you want to buy. Okay. You want to be greedy when others are fearful, but you want to be fearful when others are greedy. So in other words, when the market's booming, when prices are just running and the bulls are charging hard, okay, don't buy anything. Enjoy it. Maybe take some profit, honestly. Maybe take some profit off the table, which we're going to talk about that in a future video. You can't be afraid to take profit, but you certainly don't want to be buying at the peak. Okay. We want to wait for that to dip back down a little bit. And when others are fearful because, oh no, the market's going down, we're losing 15% today, we're going back to zero. That's when we want to be buying. We want to be snatching that up as much as we can because that's all extra profit that you're going to make when it goes back up. Okay. So very, very important to always remember that. And it's hard, guys. I'm not going to lie. It's very, very hard because here's the thing. There's something called FOMO. Okay. Fear of missing out. Okay. It's super, super prevalent in crypto. I've been there before. We're going to talk about my story a little bit in a future video when we talk about taking profit, because I learned an extremely valuable lesson during the last bull run that I am not going to repeat during this one. But there's a thing called FOMO where we see that the market's going up and there's this euphoria going on around the market where everybody is so excited and you think it's never going to come crashing back down at all and it's never going to dip down again. So you start buying in at all-time high prices because, holy crap, look at this thing run. And then, yeah, it's probably going to dip down after that. And then, yeah, you know what? You might get your money, you're going to get your money back out of it as long as the market continues to go up afterwards. But it's not as much as you could have gotten had you had just been patient a little bit. Okay. A perfect example would be the other day. And we're going to look at it here in just a second on my screen. The other day, Cardano. Okay, Cardano was booming. It went, sky high compared to where it was, and now it's pulling back a little bit. And anybody that kind of FOMOed into it, and guys, look, Cardano is going places. It's going to go way beyond where it's at right now. So even if you got in at the all-time high, don't worry about it. It's going up from here. I mean, at least this isn't professional financial advice, so don't take it that way. But I believe it's going way up from here. But that's a perfect example of people, you get that euphoric state because the whole market is just pumping, and then all of a sudden you realize, shit, it's having a huge pullback. Had I literally just been patient and waited another 3 or 4 hours, it would have started pulling back and continued to, and then I'd be, sitting in a much better position right now. And then as soon as it goes up just a little bit, I'm in the profit. Okay, so you got to look at it that way and don't get impatient. It's okay to wait it out and wait for that dip to happen. Okay, so I want to dive in my screen. I want to just kind of show how that works a little bit. And yeah, let's do it. All right, guys, perfect. So we're in our screen right now, and we're going to go through this real quick for you right here because I think you guys get the general gist of it, but I want to show you kind of how I take a look at it. So if we're talking dollar cost averaging, again, I always like to go to CoinMarketCap first just to get an idea of what's going on in the market. And if we're looking for dips because we want to buy the dips, take a look at what the price action is going on, not only over the 7-day, but especially the 24-hour, because that's where it's the most important right now when we're looking at that. And we want to, you ultimately have to be the one that decides how much of a pullback is enough for you. Maybe, 1% with Bitcoin is fine because you know what, this is still well below the all-time high. The other important thing to do actually would be to look at the all-time high of that project, and you guys know how to do that. Literally just click right on that, and it's going to take you into the Bitcoin chart right there, and it's going to be, you're going to be able to tell what the all-time high previously was for it. And it's going to give you a really good idea. And actually, I think this is off because it was up to like 58,000 and some change previously. So this is actually showing it wrong right here on CoinMarketCap right now. However, you can go in and take a look at the historical data on it. You don't have to use CoinMarketCap. There's so many other options out there that you can use for charting and stuff like that. This is just kind of the simplest form to be able to show that, so that you can make decisions. If it's not at its all-time high, there's a very good chance, at least in the bull market right now, again, this isn't professional financial advice, but there's a very good chance that at some point it's going to get back to that all-time high, most likely, as long as we remain in the trend of being in a bull market. So that's what I would be doing, guys. I mean, right now, even, Bitcoin, it's, if I was looking at it like I've got money sitting on the side ready to go right now and I wanted to buy some Bitcoin, yeah, I'd be a buyer right now for it. I'm not looking to take out another position on Bitcoin right now. There's other ones I'm looking at. I'm pretty happy with what I have in Bitcoin right now. But if I was looking to add more to my Bitcoin holdings, that would be something I'd be taking a look at. Is, it's only down 1% for the day type of thing. However, I know that price is about $10,000 lower than the previous all-time high, about $9,000 lower than the previous all-time high. Same thing with any of the other ones out here. If we go down through there, I mean, Cardano having a bit of a pullback right now compared to where it was the other day. It was up to like $1.40 somewhere in there. So, you don't notice it as much today because it's pretty much even for the day. But if you were to look at that chart like we just did, you're going to start to notice a pullback. And what you can also do is, we know that the all-time high, like if we look at this chart right here and we know that the all-time high was just breached here in the last few days, go to the 7-day, okay? That's going to give us a good idea as far as where this price action was, where it went to ultimately. Okay, so it was at basically $1.45. Let's just call it $1.45. $1.46 actually. So there's $1.46 in there. Now it's pulled back to $1.22. So it's not sitting its all-time high. So we're already getting it on a nice dip compared to where we know that it's been previously, and we believe it's going to go well past that. So that's how I would be looking at that to get a really good idea. Does that make sense ultimately? So that's how I would be doing it, guys. I think that it's a great way to be able to go about doing that, to figure out ultimately, do I want to invest into this project right now? Do I want to wait on it? And yeah, I think to me, that's how I've always done it. And I think it's one of the simplest, easiest ways to break a project down and decide what I want to put some money into and what I don't. So that being said, guys, that's it. We'll see you in the next one.